Welcome. This is the Trading Pit, your home for sophisticated takes on the crypto markets. It's April 25th, and here in the studio, JJ and Benjamin of JLabs. I am your host, Marconi White. Today, we're unpacking Bitcoin's price action, recapping token 2049. You're figuring out if crypto fight is almost over or just beginning. I'm excited. But first, before we get into any of that, it's rapid fire time where I look for simple answers to complex questions. Ready to get these guys livened up. JJ, I'm going to kick it off with you. The Bitcoin side reading by Bitcoin from 2017 Janet Yellen congressional testimony sells for $1 million at auction. Is this the top, Sig?
No, I think that's undervalued. It's a historical artifact.
What would you have paid?
10 million if I had it.
10 million if you had it.
Yep.
I mean, the picture alone is fantastic. By the way, this was a Sharpie on a notepad, so anybody can create art. Obviously, that's the moral of the story. Yep. Benjamin, BlackRock's IBIT ETF ended 71-day inflow streak with zero assets on April 24th. Very sad. Is that a top signal?
It is a caution signal for sure. It's a wall of worry.
Oh, wall of worry. You always come on here with your smile and your bright attitude. I'm so glad you're joining us again. I am so glad you survived the rains. JJ, I want to come back to you. CZ is facing up to 3 years of jail time. Does he deserve more or less?
Less. Let the man
less.
Walk. Yeah.
How little?
I think he paid enough. I think the fines are enough. He lost his job, etc. Let the guy free. I'm sure he did some shady stuff, but that's the game. It was unregulated. It was the Wild West, you know. There's no rule book.
Okay. All right. Fair enough. I mean, it can't be any worse than what our politicians do in our country. Exactly. All right. Yep. Benjamin, the future of crypto, is it Dubai, Hong Kong, or somewhere else?
I think in this hierarchy, I think it is first Singapore, and then Hong Kong, then Dubai.
Okay, your analytical thinking. All right, so if you haven't started to plan your move, it's time to do that. JJ, crypto regulation discussions, are they a distraction or a must read?
Probably a must read if you're really seriously invested into it, because they're going to be coming down the pike. So you should probably know about that stuff. See what.
Okay, and you'll probably get the best information on the show. So if you haven't already, like and subscribe and join. Benjamin, last question we got here. What narrative onboards the next 1 billion crypto coiners? Financial safety, casino primitives, or entertaining memes?
Yeah, it will be memes.
Memes all the way.
Yeah.
All right.
Yeah.
Well, as I like to say, he probably has a dog tattooed somewhere on his body. That's the way that works. All right. Well, we're going to get into some actually more crypto and more serious stuff. I want to give a shout out to Gabrielle, Light Signatures, KS, Adrian, David, and Martin Lepoc. Welcome. It sounds like you guys mostly are waiting to perhaps buy the dip. We'll see if we can get that going, but glad to have you here every Tuesday and Thursday. Hit the like, subscribe button. Definitely share this with your mother, your brother, little sister, but perhaps your grandma if she's looking to get into crypto. Now's the time to do it. But let's jump into narratives, JJ. We talk a lot about the power of narratives to drive price action in the markets. And this week, it's all been about criminality. We just talked about CZ. He pleaded guilty and is facing up to 36 months of jail time, where he won't get access to his favorite cuisine, which is a shame. And then, of course, we saw that the builders of Samurai Wallet, which is a privacy wallet, were arrested by the U.S. Department of Justice and reportedly charged with conspiracy to commit money laundering and a count of conspiracy to operate an unlicensed money transmitting service. You know, we talk about the meme here that first they ignore you, then they fight you, then you win. I guess I have a question here for all those investors that are looking at that. They may have a sense of that being the trajectory that we're going on. How do they look at these headlines when they're looking to invest? Does any of this matter for price action and investment?
I think it does from an institutional standpoint. So I think this is kind of like a cleaning up of the scene, so to speak. Kind of you put the clamp down on the old Wild West way and the privacy and whatnot, which is a shame because that's why a lot of people were ultimately drawn to crypto in the first place. But it just seems like it's kind of the gentrifying of the asset and giving it the government stamp of approval, taking out the aspects of it that they don't like, which privacy, etc. And you could see how this will probably turn into down the line, where the only way you can own Bitcoin is through a BlackRock approved ETF. Otherwise, it'll be declared illegal or something.
So will you get a BlackRock tattoo? That's the question.
No, I will not, sadly. I think that's kind of the way this arc is headed, where they're just coming for things one at a time in a very slow moving fashion, as we've seen through the past couple of years. So
yeah, they don't mind these assets as long as they can control them, right?
Yeah, that's it. It's just, I think Ben Hunt wrote a nice piece a few years ago where he called it Bitcoin with the trademark symbol, just explaining how this kind of process would unfold. And it's kind of scary how well it's lining up with that so far.
Well, I want to return to the point you said. Okay, so institutional definitely looks at this. You see this as a cleaning up. I saw a post just this morning from Ari Paul. His last statement, he kind of broke down his view on it. He said the states are just starting to skirmish on this stuff, meaning privacy, because it's related to samurai. What we've seen so far is just the start. So if this is cleaning it up, I mean, it's possible that this is the beginning of the cleanup phase for governments. How do you anticipate this being, if we continue to see this states going after privacy wallets and, it hits the headlines that, look at these illegal people in crypto. Do you think this could have a material impact on people, for example, buying ETFs because they're worried about being associated with criminals?
No, I don't think so. I think it's more to clean it up so the ETFs become more appealing. So you take away those aspects, and then it cleans up all the fears your conservative type investor, pension fund manager, etc. all of the objections they would have. BlackRock could show, hey, these have been addressed. We've cleaned up the scene. This is now a legitimate product. It's not, marked by criminality or those things as it was in the old days of Silk Road and prior to BlackRock's kind of cornering the market here.
Okay. So it's really just a cleanup, kind of a closer to the end than the beginning, which is interesting. So more to see there. I think there's obviously
for price, bad for privacy.
Bad for privacy. Okay. All right. Well, for those who are interested in to see those headlines, that's an interesting perspective from JJ Benjamin. I want to move on to you. You said on this show that the future of crypto is in the East, and it appears that Bloomberg seems to agree. When they were writing about token 2049, they say crypto's big party in Dubai signals the industry's future is in the East. And in fact, the article goes on and has a quote from Chainlink co-founder Sergey Nazarov saying, quote, between UAE, Singapore, and Hong Kong, those are the hubs I'm seeing emerge as the places where people generate their entities and have legal standing. Benjamin, I want to ask, if the East does lead, what does this mean for markets? And then interestingly, what does this mean for investors who aren't in the East, the ones in the West?
I mean, we probably see two worlds in crypto as a result. With the Bitcoin ETFs in the West, West probably focuses more towards products which are financial safety, retirement funds, or how to safeguard my 401k, how to get Bitcoin or Solana or ETH into my 401k. Those type of focus probably comes in with the West, and the East continues to focus on its degenerate mode and sees how they can keep on making more percentage ROI, rather than thinking about what assets can I buy that I can put it in the coffin for next 25 years to retire and send it to my next generation. So that difference is significant, I would say. And most of these crypto places that has been mentioned about, all three of them are very good tax efficient countries and far easier to set up shop, get a bank account, even if you are a crypto company. And of course, Singapore is a little difficult when it comes to employee visas. It's an expensive process, but if you take Hong Kong and Dubai, it's relatively comfortable when it comes to setting up entities and getting visas. And that also helps a lot of these entities to hire people faster, build faster.
So,
the tax haven advantage also attracts everyone.
So, Benjamin, I want to ask a question. I mean, specific to markets, we talk about the New York session being a key indicator of where the market is going to go. You just talked about how the West markets may be more focused into legacy wealth and seeing how they can add these products into that. The East may be doing something different. Do you start to see a bifurcation of just the general trading of assets where the West is more focused on established BTC, perhaps Ethereum and Sol, and the East is really starting to be the bleeding edge of new ideas?
Yes, it is possible because there is a ease of entry now in the East compared to the difficulty in the West, right? The cost of deploying a startup for any founder in the West, be it a European nation or a US nation, is very high. Like you need an X amount of money in order to survive the entire year while you are fundraising for your startup, for your crypto startup. And that is an expensive deal, right? But when you come to East, it is much cheaper. That's why even in the last cycle, we saw a lot of Westerners move towards Thailand, move towards Indonesia and Bali and set up shop and do a lot of tech development because it became very expensive to run a shop in the West. Um, so that is another big advantage. And you're able to find talent everywhere now. And there's no reason that entrepreneurs need to stick to one place. They can move around. They could be in all three countries. And when it comes to wealth allocation, financial safety continues to be one of the biggest focuses when it comes to the West. So if they can safeguard their BTC, if they can inherit, if their kids can inherit their BTC, that remains focus. And this will continue to improve, and there'll be probably better instruments that comes in, which is more tax efficient and fee generating for the rest of the Wall Street, and more funds will come into it. But you have to keep in mind that this is not an isolated market. BTC is not isolated from the rest of crypto. And as the value of BTC, as the liquidity of BTC improves, as the price action of BTC improves, I mean, it's been 500 days since we had more than a 25% price drop. That's a huge confidence boost for a lot of asset allocators, right? And this also means this gives a huge liquidity boost to the rest of the market because there's always an overflow. Someone coming in with $1 billion into the US market, pushing up BTC, means everyone who's not in the US market, still holding a lot of BTC, suddenly ends up with a bunch of liquidity that they never thought they will have because price went up, access to liquidity went up. They can swap to WBTC, collateralize, borrow funds which did not exist, and the rest of the assets gets liquidity as such.
Yeah,
so that overflow effect is huge.
I was going to say the Bitcoin boat, a Bitcoin tide lifts all boats, so to speak. Well, so I want to bring it back specifically to token 2049. I know it sounds like you were in Singapore. You saw that before. Now you're in this one in Dubai. What would you say would be your top 1 to 2 observations there, just in terms of the way in which people, VCs perhaps, or retail investors that are there are thinking about investing for the coming 12 months? Something maybe that surprised you.
So there is a difficulty that everybody is facing is about what type of token economics is fair and what to go with. And what the market is telling people is that if you do the meme-oriented token economics, in the sense like, okay, meme tokens for all our biases, whether we like it or not, they proved one thing, that going on a full fair price distribution of tokens, people like it. Retail likes it. They like it that there is no other unknown entity which can basically come and dump all of their tokens and get them to zero. Of course, there is a huge risk that comes from deployers of the smart contracts itself who basically rug pull them. But it seems the retail is somewhat fine with the developers rug pulling them rather than VCs coming and rug pulling them. And now the problem is
the devil, the devil,
yeah. So it's like, I'm prepared for this risk, but I'm not prepared for what risk will come as a result of the VC doing a lot of shady deals, backroom deals. Not all VCs, there's the majority of them are good actors. There are always a few nefarious VCs and market makers who act in bad sense. Now, they're like, I don't like you at all. I don't like anyone at all. It's binary decision that they're making, and that's not right either. And on VC side, the difficulty they have is like, look, it's all great. Memes are great. And we make personally some money as well. But we cannot put in our funds in there because our LPs will not agree to it. That's not the thesis they signed up for. They signed up for crypto thesis with our fund because we are helping build something. And now you throw in on 100 memes and one of them sticks and potentially ends up becoming a pudgy penguin type of a product, but that is 1 in a million. most of the other products are basically nothing. It does not generate any value. It does not generate more and more content, which has value. So everybody's in impasse, and they're like, okay, we cannot do token economics that people like and still make our LPs happy, and we cannot go and deploy into meme coins. So what do we do? So that confusion still continues.
So this is leading to capital sitting on the sideline waiting for projects that both keep the LPs happy, but also allow retail to feel comfortable that they're not going to
So
get
there's a
rug pulled,
lot
that they're
of
not going to be
capital
exit
definitely
liquidity.
on the sidelines. There's a
Yeah.
lot of
So
capital on the sidelines for sure.
if you had to, then we'll wrap this up and get into the market update. A lot of interesting information on token 24/9. But if you had to speculate, where do you see that? What do you think is your highest conviction of where that money will end up going? Is it where the AI narrative starts to pick up steam and perhaps those projects continue to move? Are you going to see projects pivoting their token economics and maybe specific projects starting to be a little bit more curated towards the retail mindset? How do you think this is going to play out?
So there's a lot of deep in narratives that was running around decentralized GPU, decentralized compute, decentralized AI. 2 years ago, when we went for the Singapore conference, it was filled with metaverse, filled with NFTs, filled with a lot of those things. They had great goodies and gifts for the users visiting their stalls. But this time it was very different. I think it was far more mature. Everyone was going the NVIDIA route, and whether they can make it or not, but the thesis is about how can we decentralize physical infrastructure, decentralize AI, link it with the DEX, link it with more data infrastructure. How can we decentralize such type of sectors was the thesis. The difficulty is it's all much harder than the ICO period of 2017 when everything seemed impossible, but people loved it. It's still impossible. A lot of those things that's being discussed, the Internet of Things and those perspectives are still hard to achieve.
Okay. So it sounds like, I mean, if I'm reading through what you just said, there's some interesting narratives. Kind of the NVIDIA thing is out there that's on everyone's mind. I mean, I would still argue AI is still everywhere as sort of this simmering narrative that people want to latch onto, but it's kind of cooled down a little bit. But you don't see anything that you have high conviction that's really going to take off in the near term. You're still waiting to see what's going to start to mature.
So when you compare it to 2020 halving, during April and May, we started having the big boom for DeFi. That's when the DeFi boom started, DeFi 1.0. Right now, we see that happening with meme coins, but we don't see that happening with an innovation like DeFi happened. That is the problem. This cycle, I think it is one of the least innovative cycles we have ever seen.
Yep. Okay. So I think that's good perspective for those who are maybe using the same playbook that they had in 2017 or the DeFi cycle of 2021, where they're looking for some of those projects that are innovative, small cap that could really burst forward. Maybe we're not going to see as much of that because it just hasn't happened. So something I think to keep in mind, and good observations, Benjamin, from Token 2049. All right, guys, let's get into the market update, as I know there's a lot of people here that are interested in your perspectives on what the market's doing. Interesting. I did ask the stream if they're buying, selling, or waiting. It looks like we've got waiting from Gabrielle, got waiting from Light Signatures. KS is buying. Interested what KS is buying. Holding. I see a lot of that. So and then Adrian notes that I think he's waiting. Is it Adrian or someone else mentioned that they're waiting for the Dixie to decide it's definitely coming down instead of playing with us. So looks like the market, maybe we got some people just like our VCs that have some money sitting on the sidelines. So let's talk a little bit about what we're seeing. On Tuesday, we talked, JJ, about a Bitcoin market crawl or crab crawl. And the indications continue to be that that's going to be the case. When I looked at the price before we started, BTC was at 64,000, ETH at 3,100, roughly unchanged from last time we met. The ETF inflows for Bitcoin was negative, 120,000. And for the first time, IBIT didn't have any inflows at all. So JJ, break down. I mean, let's see. Do you have more and more conviction that we're in a crab walk? And if so, how long is this going to go for?
Yeah, it's definitely just that crab walk chop period that we've been discussing. So we see it tried to break out earlier this week and it failed almost perfectly right at the 50-day moving average, also the 50-hour side mark here on the daily chart. So really two pivotal lines it needed to get over to reclaim that momentum and make a move back to 70K. And it failed right at that resistance. And now we're just back into this chop zone, right? Where we have kind of a clearly defined bottom for now, which is around 60K. And then we have a top end of the range, which is around 67. So I think it's probably just more of the same here in the week to come. There's FOMC next week, so that's obviously going to cause a lot of ripples through markets one way or the other. And it just seems like we're probably going to be continuing to chop from now till forward. So it's not a real big time to be betting on positions one way or the other. The market's just probably going to keep swinging back and forth. And if we look at like the implied volatility index here, this is just falling off a cliff, especially over the past week. It just keeps going lower. And what we were saying on Tuesday was you want to see Bitcoin get above 67K with this rising, and that would kind of be of an indication that the market's preparing for a volatile move to the upside. But as price was going up, this just kept bleeding lower, which was indicating that options were taking that opportunity to sell their upside. And we were just going to hit that kind of rough patch there at 67K, which was just too much resistance. And now here we are.
So yeah, the crab walk looks like it's got a long ways to go. I want to get your take on looking at some of the expirations going out a little bit further, as well as the OI interest, because when I looked at this morning, the open interest, the long short ratio was some of the highest I'd seen at 62 to 37%. You're still looking at 17 billion in open interest, which is within the range that we've talked about on several weeks. And then the basis trade in the largest markets I was seeing was still 9 to 12%, still looked pretty healthy. What do you make of that information in terms of how the market is thinking about where we're going to be in the next, say, couple of months? Are they really just going to juice all the cream they can off the top here?
It was interesting. Yesterday, you see this heavy sell volume on Coinbase, and this basically started as soon as the market opened. And what I saw at the same time was open interest climbing. So we kind of had this bottoming point here, and then open interest was climbing as Coinbase was selling off their spot. So what that kind of signaled to me is somebody was taking perpetuals to bid up the market just to sell their spot into those buys. And it seemed like the market was offloading into increasing open interest. And then we finally got that huge drop off. So that doesn't seem to be the most bullish thing. Like what you would want to see is shorts really getting aggressive here. But obviously funding's flipped back to positive despite like the large liquidation we had yesterday. So it just kind of seems to be neutral in the perp market. I think it's just kind of leading its hand to more chop as we've been outlining there. There's not really a directional bias one way or the other. It just seems like somebody was selling off tremendous amounts of spot yesterday. Like we could see this in the Coinbase volume here. How much has been sold off? It was actually more than was sold at the bottom 2 weeks back. So people really took that move up as a chance to de-risk, probably ahead of what's likely more chop, if not lower lows coming within the next week or so.
And your targets for us heading down, I mean, I imagine the 100 and the 200 day continue to move up slowly. What do they look like right now if we're looking at hitting those over the next quarter?
So we have this downside Bollinger Band, which is around 60.5, which will basically be a retest of the bottom from last week. Then below that, we have the 100-day moving average at 58.4. I think those are probably two good spots for bounce, at least now. If we get below there, the odds of us returning to this 200-day just keep increasing. So I'd like to see it bounce from 58 or so if we do get down there in the next week.
Okay. I do want to get your a deeper view into options. Before I do that, Benjamin, I want to ask you, as you start to see this crab walk take hold, what's the mindset in the East? Because you mentioned sort of their love of memes. They're looking for the fast action. What's their perspective if we start to have a crab walk? Do they really just walk away for Bitcoin, or do they see this as an opportunity to accumulate?
Bitcoin, to be honest, the narrative of Bitcoin was lost from last cycle itself. And in the last cycle itself, we saw towards 2021 that people increasingly pivot away from Bitcoin, focus more on ETH, Solana, and ETH DeFi and NFTs, right? So last cycle, NFT already took away a lot of liquidity that should have come to Bitcoin, which is also why it did a very mediocre run, I would say. this cycle, it is happening to BTC and ETH from Solana because of meme coins. So I honestly don't think average retail is trying to allocate towards Bitcoin at all. Why would they? Because it's too expensive for them, at least in the East. It's,
Hmm.
I mean, probably a good developer needs to make 5 years of salary to buy one Bitcoin, which they're obviously not going to buy. They'd rather go into low unit bias tokens, which they're able to probably own, get into a community structure, see if there is a more utility for the token, such as like even if you buy ETH, you're able to use it as gas, you're able to lock it into Pendle, you're able to go and do staking, you're able to go and play DeFi, bridge it to more L2s. So that is kind of what drives people to come into a network now. It's like if I buy your token, what else can I do with it? If I buy your NFT, what else can I do with it? If I can't do anything with it, at least will I make 100x?
Yeah.
So,
Okay. So,
right.
so what I'm hearing, what I'm taking from you, the mindset very much is, the crab walk for Bitcoin is really not even in their purview. They're not looking at that at all. It's really trying to see where the other assets are sitting from a price perspective and what other utility they can get into.
Yes.
Okay.
It's more about what else they can have fun with rather than putting a major chip into Bitcoin and not being able to do anything with it. So,
Sure.
which is
Okay.
also what I see with the Bitcoin. I know I'm extending the topic, but which is also what I see with Bitcoin L2 ecosystem and BRC20 and runes. What's happening is that I think the BTC maxis also got a bit tired of seeing what was happening with ETH and Solana, right? These two ecosystems came up and were basically able to do a lot of things. And while BTC maxis had to sit on sidelines, they had to just hold their BTCs or sell it and get out. Those were the two options they had. Which is why, if you see in the past year, you've seen ordinals market boom a lot. Runes market is starting to boom a lot. There's so many BTC L2s, BTC bridges, marketplaces, launch pads, oriented projects are coming because the BTC maxis are like, well, you guys had your exit liquidity, where's ours? I can't
Oh
blame
man.
them, right? I mean, they've
Yeah.
been holding it for nearly 7, 8 years, and the only thing they've been able to do is, go and lock it, go and lock it up with an institution, lend it to Finex or something, get a 8% annual interest, take that, and play around. That
Yeah.
is what they've been able to do. But now with Stacks ecosystem in the last cycle proving that there can be more to Bitcoin than this, and Lightning was not so much of a success, in my opinion, except a few payment gateways. Nobody's really building a DeFi product on Lightning. And now there is a DEX coming up in Bitcoin, ecosystem. There's all types of ordinal bridging systems that's coming to EVM. So there's a lot of interoperability oriented, approaches that Bitcoin OGs are funding and pushing it because now they can. Because what else are they going to do with it, right? I mean, take a small portion of it, throw out, and it becomes a $1 billion market cap, perhaps, and that is a great game to play. So that would be the only narrative why someone would buy into Bitcoin and come in over there. So if you go based on that, yes, there is a demand in the East, especially in China,
The long one.
and Asian regions,
Yeah.
in the Southeast regions, there is a demand for ordinals or runes, those type of projects in Bitcoin ecosystem. Yes, people are buying Bitcoin to come into it, but people are not buying Bitcoin to put it in their savings account.
Right. So there again, I think to really highlight what you're saying there, the interest is in the utility. If that ecosystem is built around it where they can do different types of investments deployment, then they get excited. But without that, it just doesn't hold their interest unless it's 100x opportunity like a meme coin.
Yeah.
And I think we could have a deeper conversation on ruins, on the ordinals. There's a lot going on there, but probably a little bit more than we have time for today. And at one point, I do want to add, I did see that Casey, who is I don't have his last name in front of me right now, but he is the person that did the ordinal protocol. He also did the ruins protocol to be able to trade memes on Bitcoin. He just put out a podcast. It was all supposedly directed to the East. So he very much sees the importance of bringing the East into the Bitcoin ecosystem if it's going to be successful. So I think it goes into a lot of what Benjamin, you were just saying. Okay, JJ, I want to come back to you though. Talk a little bit more about the options that we're seeing. As I mentioned, I looked at the expiries going all the way out to 531, and there was 2.5 billion in notional interest on that expiry. A lot of interest on the 80,000 K area, the call volume. Walk us through again. Is that giving us any indication of how the larger accounts are kind of positioning themselves? It seems like there's still a good amount of hedging for either action as we do this crab walk.
Yeah, that 531 expiry, that's something that we've been pointing out the past few weeks. It's just been continually growing, especially in call interest. We see it's now up over 27K. About 2 weeks ago, this was around 5K. So the past few weeks alone, there's been a lot of call interest added to that. The real elephant in the room right now is this expiry that's happening tonight. So you see over 6 billion in notional value. And this was a lot of this was the popular trade pre-halving, and that everybody thought the halving was going to be this kind of explosive event to the upside. So you saw a lot of calls rush in there, 70K, 80K, and these are all going to expire worthless now. As we showed on the implied volatility chart, it's just been about a month and a half now of volatility being sucked out of the room, right? And this kind of seems to be the final drop in it, where people are just kind of giving up on their long-term bets of increased volatility to the upside in the future. It seems like this kind of range doesn't seem like it's going to end anytime soon, and people are capitulating on it. So this is interesting. Like, we got up to that 65K, 66K mark that we were pointing out on Tuesday, and we were saying, hey, dealers are short a lot of gamma here, unless there's some kind of rush to the upside, like some kind of catalyst event. Price is just going to continue to chop down to the back end of the range. So what we'll see now probably is price chop back, possibly make these 64K puts worthless overnight, expire there. And then once these contracts roll off, which is later on tonight, price will probably be pretty free to move to expand, because we don't have as much open interest in the options. We see here next Friday's less than $1 billion of notional value, the 10th, $500 million of notional value. So it's nowhere near the $6 billion of notional value that's currently expiring tonight. So as those contracts roll off, a lot of gamma will roll off with it, and price can kind of find a level, whether that's an expansion to the upside or downside. We'll have to see how that shakes out, but there will be like a window of opportunity where price can move more. It can expand a lot quicker than we've seen in the past few weeks, where it's just been this never-ending chop. Basically, I attribute that to the amount of open options interest in that April 26th expiry, because it got so crowded into the halving. There was never going to be that kind of realized volatility. People piled into those positions. So it seems like the market is taking bets now on May, both to the upside, and then we also see some put open interest opening near 55K and 50K. So it's kind of preparing for that expansive move in one direction or the other, whether that's a return to new highs or back down to new lows below 60K. We'll have to wait and see how that all shakes out. But it seems like some early bets are being placed on there, and they have been over the past few weeks. So keep an eye on those. I would say the 55K contract and those 69Ks are the most interesting ones on those expiries.
So the crab walk could continue. Maybe the crab gets a little quicker as the danger starts to pile up. Okay, so I want to pivot then to talk a little bit about outside forces. We had a couple of comments here I highlighted earlier. Gabriel noted that he's watching the fundamentals with BTC make a move soon. ETF inflows. Type in mentions when Dixie decides it's definitely coming down instead of playing with us. That's the move to start buying in. There was a question here from Adrian about the USD JPY, what impact that could have. Bank of Japan owns a lot of dollars. So the question is, when we talk about outside forces, we did a good amount of that on Tuesday. For those who are here and they want a deeper dive, I would suggest you listen to that episode. But just as a highlight here, JJ, what are you seeing from the Dixie? And does that give any indication whether it's going to break higher or lower? Same question we ask every week. And is that going to kind of be the catalyst to send us one way or the other for BTC?
So I think it's more caution until next week's FOMC decision. Then we'll finally have some insight. But rates are moving lower this morning. So these are the December federal funds futures, and we see they had a rate cut priced in earlier today. And then after this morning's GDP and jobs data, I didn't have a chance to look at those yet, but apparently they weren't favorable. So we see these rates moving down again, and that could give Dixie the momentum to the upside. If we see a follow through, like the Fed comes out and confirms, hey, yeah, we're not cutting this year due to the inflation data, GDP, whatever narrative they assign it to. nobody knows, right? I think you're seeing that in the market right now. It's just a whole lot of uncertainty. We don't have definitive price action moving in one way or the other. Volatility's fallen off a cliff because nobody's really taking bets on either direction at the time. So it just seems like a whole lot of yield signals across the board in markets currently.
Okay, so the outside forces continue to be unnoticed, but not necessarily driving us one way or the other. Benjamin, I want to ask you a question about the mindset that you saw at Token 2049. So much discussion over the last 2 weeks has been about this risk of war happening in the Middle East, and then obviously the continued conflict that's happening in the Ukraine with Russia. There's a lot of discussion, at least in the Western media, about how we're pivoting. The world that we've had over the last several decades has changed. Are investors in the East thinking about that as much as we see it talked about in the West?
Nope, none at all. Nobody is believing it. Nobody is believing that it is going to be any real conflict at all. The consensus here, at least in a lot of discussions and meetups that we were looking at, they were all like, well, it's been happening, and they're just doing a piss off contest between each other, but both of them don't have the intention to escalate because of the way in which the whole thing fell through, right? With the Iran announcing nearly 72 hours in advance what they were going to do, and with Israel coming back and saying like, we'll do an attack, it will be unprecedented, and that was also very badly received. And yeah, I mean, the whole thing looked like it was a big stage.
It's choreographed. So
yeah.
you're saying that the investors don't really buy the news that they hear, which is sort of doom and gloom when they see this conflict?
No.
Okay.
That was not even a big topic of discussion at all.
Okay.
Yeah. I mean, if it had anything to do with China, Taiwan, then we are talking, or Russia, perhaps. But I don't think anyone is too bothered about that. Everybody thinks it will not escalate to a world war scenario because neither Iran nor Israel nor US wants that in an election year. And that consensus seems to be dominant amongst everyone. And almost all of those jerk reactions that we see with the price action seems to be anyway algorithmic and sentiment driven. And as time goes, this Israel-Iran conflict or the worries probably become like what it was with Ukraine-Russia conflict, right?
Kind
I mean, nobody talks about it right now, and it was the talk of the town for half of 2022.
So what I'm hearing is that just in terms of the calculus investment decisions, the East isn't really putting that into their investment thesis and how that could disrupt prices. They're really focused on other factors that you've already covered.
Yeah, I mean, everybody's focused on liquidity. Everybody's focused on rates, of course, and access to capital from where and how. But it's not the macro political scenarios that anyone is worried about. Everyone is also very confident that election years are safe to play, and 2024 will continue to be a safe year. That seems to be a consensus, at least. That's why the ballots are out and people are investing and moving money around. Another factor which perhaps many have not accounted for is apparently a few of the FTX creditors are able to get good claim rates on the secondary markets. And we've seen even a few of our clientele, right? They are able to get a good deal and they're coming back into the market as a result of it because they are now having their FTX liquidity come back to them, even if it is like 60 cents on the dollar or 70 cents on the dollar, because they could make back that money they lost by investing into the markets rather than waiting for FTX to come back.
Yeah,
so there is that sentiment as well to a certain extent. And that liquidity is also playing out a little.
I was going to say, if you get 60 to 70 cents on the dollar from FTX, you think about that, contrast that with what Mt. Gox people are getting. 10 years on. That's a pretty
it's
good
very
deal.
case dependent, of course. It's very case dependent, of course. What is the sizing? Are you a retail account, or are you an institutional account? Institutional accounts are getting very good deals compared to retail accounts. So it really is case dependent on who's trying to buy your claim. But overall, it seems like people are trying to find a way to get liquidity one way or other. A year ago, it was not the case. A year ago, it was about, well, this is all a scam. BTC probably goes to 45K and then dies to 8K. This was the consensus.
Yeah.
Now everybody is like, okay, let's wait and see. Like the FOMO factor is still a little mild, I would say. For example, today when I was talking to a few of my people in the circles, people are still quite bearish after the halving. Nobody is either confident of a big downside or upside, but nobody's betting that we'll see a major upside until October at least. And yeah, so it's a
Okay.
little bit
All
toned
right. So
down
yeah,
sentiment.
it's a little bit of go away for the whole summer. I think Adrian mentioned that chances we sleep for a couple of months here, maybe the whole of summer is what he's looking at. And Adrian, I know you were asking about the USD, Japan. I think we really kind of summarized that in terms of JJ looking at the Dixie. So, but anyways, I want to cap this off. So what I'm hearing is from an Eastern perspective and from Token 24/9, not a whole lot of stock put into the politics. A lot of belief that in an election year things are fairly safe, but we're going to be kind of mild trading, really expecting a crab walk for the foreseeable future through the summer, so everyone can go get their pina coladas, get a tan, come back in the fall, and be ready to trade. So maybe as we're talking about some of these opportunities, they may be a little bit early, but for those who want to stick around and make some trades, there can still be some action. So we're going to talk about that next. If you haven't already, definitely hit the like and subscribe button, and just be sure to share this wherever you can, be it on X, be it on Reddit, be it on Twitch. I don't know. Text your mother, your brother, your sister, your friends, that person that keeps on bothering you on Telegram to give you calls. Send them the show. Tell them, check this out. This may be a good way of thinking about your trades. But JJ, I want to come back to you. Every single Tuesday, Thursday, we go through the options. We talk about, is there a play right now? I think we've made the case for several shows now that, yes, there are plays. They're not necessarily as juicy as possible. Obviously, with big expiry that you just talked about coming out on Friday, what's your thought there? Is it really time to sit on your hands, or would you be looking at a BTC or ETH option play?
Yeah, the implied volatility, it's falling to an interesting level now. So we have almost retraced that entire explosive move up from the 50K level up to the 74K peak when implied volatility just went through the roof, right? And people were paying insane premiums for contracts due to the kind of squeeze effect. And now we've seen that roll off and all that euphoria sucked out of market. So it's reaching an interesting level here where options are nowhere near as expensive as they were just a month ago. And the odds of us staying in this range for much longer than another month are decreasing, right? Like the longer you're in a range, the more likely it is to break over time. And we've kind of been here for a month and a half now. So the odds of this giving way, whether that's below 60K or back to the highs and 75K and beyond within the next month or two, I think that's increasing. And then we probably have another low period throughout the summer. So I don't think it's a bad time to place bets. Maybe wait until we get a little bit closer to FOMC. There will probably be more volatility drain between now and then. And then you could look at playing those May contracts, maybe even June, where you buy some put exposure to the downside in case of a downside break, and then you hedge that with a longer dated call. Like if you're still bullish on Bitcoin into the end of the year, the implied volatility levels have fallen off so much that you can get premiums for end of the year contracts. And like we said, just a fraction of the cost of what they were a month or so ago. So if you still believe, Bitcoin's going to 200K by December, you could buy a 100K call for only $6,000 currently. And that could turn into a nice profit if we do get that kind of blow off top scenario. Dixie, falls below 100 later this year. These would really turn to huge profits, but I think it's still wait and see for now. Or if you're going to enter that trade now, sell some shorter dated volatility against it. So maybe you buy a 70K call for December and then you sell some May calls against it, lower your cost basis, and just see if we get that confirmation from the market that, hey, this implied volatility score is finally reaching a bottom here. I mean, it's it's been chopping for a couple months, and now we finally had this huge drop down. So probably consolidate a little bit, maybe fall a little bit lower, but I doubt it's going to fall under 50 again. Like here's the kind of setup that we got after the ETF was it went from 77 all the way down to 42, and then it basically doubled within a month span. So these are where your biggest gains come from, is this kind of snapback effect from implied volatility, and you want to be long it anytime it's falling as rapidly as it is now. But I don't think we're at the point of snapback, but I think it's coming within the next few weeks. So keep an eye on those and be prepared to kind of enter what would be a straddle trade where you're long a put and also long a call, and you kind of have exposure in both directions should price make any extreme movements here in the next month or so.
Okay. What about, so from a Bitcoin perspective, you see this as a potential play because as volatility is coming down, you can be buying those long dated calls. Do you see the same with Ethereum? Is this still a good time to be looking at that? I know I was just seeing some rumblings this morning that the ETH ETF, they're expecting it to be declined. With I'm trying to remember, I think the initial ones were in May. I think the one that most people are hanging their hat on is BlackRock in August. But what's your perspective there?
Yeah, a lot of puts coming through on ETH this morning, in particular, the end of April, 30,000 or $3,000 puts. So let's see what those are currently trading at. $29. So people are buying these up, or I'm sorry, $147. People have been buying these up on the put side, expecting, or no, I'm sorry, 29. I was looking at calls. Yeah. So $29, these have been bought pretty strongly. I think what the market's expecting is some kind of a capitulation event when they finally announce that news. It's telegraphed. We all know it's coming, but the algorithms will probably sell it down anyway when they announce, hey, no ETF or delayed ETF, whatever the announcement's going to be. It seems like the market's betting on it being bearish and buying up those puts. They're pretty cheap. So, if you get a kind of downside crash to 27 or so, these will turn to 10x within the next week if you want to take a flyer on those. And I favor the long-term calls on here. Still, I think, especially if we get that washout event, look for that. And I think you could get some really juicy entries on calls above the highs of this year. So if you go to like 3,500 and beyond for December, they're pretty cheap right now, I think, 700. But if these get down to 500, I'd be happy to buy even more.
Yeah. I think Ethereum makes for a very interesting options play. And obviously we've covered Bitcoin quite a bit here, but the Ethereum play is very interesting. For those who are interested in playing these options, definitely check out the CoinCall link in the description. We talk about them on every show, but they're a great exchange to be doing options, spot, and futures for all the majors, and most likely the Bitcoin and Ethereum plays that you see here. They're also the exchange that JJ's highlighting in all of his options educational videos. So it makes it very easy to start your options journey. Or if you're thinking about more sophisticated plays and you're thinking about what JJ's talking about in his videos, it's definitely a good place to be able to execute against that. So definitely go check that out if you're interested in options. Okay, so we've talked about two different plays you could be doing, both from a Bitcoin perspective as volatility comes down, as well as around the Ethereum ETF most likely announcement, which is a decline or cancellation. Benjamin, we're going to leave this one with you, which is, you talked about the fact that the VCs are having a tough time figuring out where to put money. The East is definitely looking for places where they can do more things with their money. That's why they were excited before about the Ethereum ecosystem, the Solana ecosystems. What do you think right now, as we go in this potential period where things are kind of cooling down? What are some interesting areas that you may look at? Is Ruins an interesting area that just launched on Bitcoin? Are there other areas in, let's say, DPEN or in the Solana ecosystem that you think people may be looking for? I'm not sure you're looking at a specific call as much as just some areas of interest from research.
So for clarification, I don't think VCs are struggling to find a place where they can, put in money. The VCs are finding it a struggle to convince the retail to follow them.
Okay.
On where
good clarification. Yeah.
The market's efficient. It learned from the mistakes of 2021.
Yeah. So I mean, they are able to find very good projects, to be honest. There are a few products that probably will have a good scope and has some utility, probably doesn't need a token, or maybe needs a better inflation economics. But I wouldn't say all projects are crap. But The problem is they cannot keep cash on the sidelines. They have to invest. And this also ends up, bringing in projects like WorldCoin with crazy inflationary team and token economics. And you see that doing it 3x or a 4x. But market doesn't want to come back to it because it considers it as a not a sound investment. And this is the problem that VCs are facing. But when it comes to ecosystem side, Solana definitely has a huge upper hand, and definitely um, I have never deployed a token even for a test in Solana ecosystem. I've played around on Base, Arbitrum, and these ecosystems, but not on Solana. But what I keep hearing is that there are now a lot of tools to deploy a token, or to deploy a meme token into Solana in a much faster rate, and that really attracts a lot of users to come in and deploy a token, play around with it, and even if it is just for experimentation sake, because the cost of entry is very cheap because it's Solana and it's not ETH. In ETH it's expensive. You probably need $200 to do anything at all, to do a solid deployment, but in Solana you're able to do it at much cheaper rates. And they have a lot of LBP based fundraising platforms, fair fundraising platforms, and so on. So it's starting to form its own narrative and a fan base. But I do honestly think that the same BTC maxi situation is what is happening on the ETH side right now, competing with Solana. Even though the retail is now sitting with Solana, I think they will eventually come back to ETH. There will be a type of a rotation. And all of you know that I'm a BTC maxi as well, but on the ETH side, if I were to be a maxi, that would continuously be on the base mainnet. So things that get deployed on base mainnet, sooner or later, it's going to be like, well, are you deploying it on base? Then let's talk about investments, or then let's talk about forming communities with Farcaster, Friend.tech, and a lot of these ecosystems coming up and doing well. And many dexes are also trying to be also on base. So many wallets have made base as their main entry into their wallet. There's a huge advantage that base has because of Coinbase relationship, of course, ownership, of course. So I
So what
would
I'm
continue to focus on these two.
so researching protocols, projects that are launching on Base, and as well as the Solana ecosystem. Is that fair? Is that what
Yeah,
you're suggesting?
this is the current scenario. The problem with BTC is the entry cost. So to go ahead and play on runes or play on any of these BRC20 tokens and ordinals, it's much more expensive than the entry cost into ETH. So Solana has a huge advantage because it's low entry cost.
Yep.
You can come into crypto with just $200 or much lesser than that if need be. The next one is basically ETH, wherein $200 will not do much, but it's at least somewhat of a starting point. With BTC, with $200, you won't be able to do anything at all. You won't be able to buy a mint. You won't be able to go and mint anything. The gas cost is so crazy. Sorry, the transaction cost is so crazy. So that is the difficulty with BTC. If there is a cheaper route to do that, then all the runes and all of these will do fantastically well. So if you're a meme coin guy, or if you're a degenerate, but if you have enough money, you have a lot of BTC, then BTC is the place where you need to go. You need to go for runes, ordinals, dexes that's coming on there. That is of huge scope because almost a lot of them will do 10 to 20x and so on. That's what I think. But if not, then it's Solana and ETH layers which continues to dominate.
Okay. All right. Well, so for all those out there, I'm very curious if you've got thoughts on these ecosystems, be it Base, be it Solana, be it ETH, be it the emerging Bitcoin ecosystem. We'd love to hear from you. You can add comments either here in the chat or once the show actually goes off live, add some comments of what you're looking at and whether or not you're interested in us kind of exploring some of those areas as well. We've talked about specific tokens. We're hopefully going to be bringing that back relatively soon with Cody coming back to do some token ratings and obviously some continued analysis of some of these projects and ecosystems. But with that, we're going to wrap up the show. I want to thank Benjamin and JJ for being here, dropping the alpha. I want to thank everyone for joining us in the chat, letting us know whether or not you're holding, you're selling, you're buying. Be sure to join us every Tuesday and Thursday for the Trading Pit, where we're going to be breaking down the markets, talking about where to invest and trade. Of course, it's not financial advice. We're all avatars. But with that, I will leave you with the same PSA I do every single time, which is to have some dry powder. You're going to want to use it. This is Marconi White signing off.